Hello, my name is David Hector from the Interface Financial Group. I wanted to spend a few minutes this morning to talk to you a little bit about invoice finance, or invoice factoring as some people know it as. What a lot of small businesses don't realize is that they have a very valuable asset that they're not taking the most advantage of when it comes to cash flow needs. They don't realize that with the great customer base that they have invoices that they can use to help boost their cash flow. The majority of clients that we see are small to medium-sized businesses, usually with a turnover of less than $10 million, and they have great customers. The problem with a lot of great customers who are larger businesses is that they often pay slower, and that creates a growth problem for the small business because they need to unlock the cash flow from those invoices in order to get the next job or get the next project or bid for an even larger business. The business from a larger company. And what they don't realize is that there's a field of finance called debtor finance, which can offer them the cash flow to help them grow their business. Now within debtor finance, it's often called invoice factoring, which basically means that it allows them to sell the invoice to a factoring company like Interface Financial Group. And the factoring company will advance them a percentage, usually 80 or 90% of the value of that invoice up front, and then it's the job of the factoring company to actually wait for the payment. And what this allows the small business to do is to unlock at least 80 or 90% of that invoice, and then they can reinvest that in paying suppliers, taking advantage of early supplier discounts, paying staff, subcontractors, and allowing them to continue to move the business forward without having to always wait for payments. And what we also find is that there's a tremendous value for the small business owner in not having to worry about where the cash flow is going to come from. If they can get the funds in their bank, then in their bank account, then that allows them to just move on with the business and focus on running and growing the business as opposed to worrying about how they're always going to pay the bills. So looking at this field of debtor finance called invoice factoring, invoice finance is something that we encourage all small business owners to really take a good look at, particularly during the upcoming Christmas season, where over the December-January period, there's particularly slow periods of payment. Thanks a lot.